David Burrows is here from Barometer Capital Management. As we talk about North American large caps, we're off to Ottawa for Ingo. Hello.
Hi, Michael. Hi, David. David, I was wondering if you could tell me, I'm thinking of getting rid of Bank of America and buying Crombie REIT. Could you please tell me anything about Crombie REIT? And maybe you could tell me if that'd be a good move. Thank you.
Sure. All right. Apples to oranges, perhaps.
Yeah, you're making it's a very interesting comparison. So let's just talk backdrop. As the long-term rates on U.S. government bonds backed up from November of last year, about 1.5% to almost 3% this summer, all of the interest rate proxies, or things that behave like an interest rate-driven product, backed off in price, and certainly REITs were part of that complex. In November of last year, we had 22% of our income fund in REITs. I can tell you today it's about 6%. What has happened is there's been a lot of money rotate to things maybe with lower payouts but with higher dividend growth or a little more economic sensitivity. So REITs have suffered during that period. Now, that being said, our view is that probably long-term rates stay range bound 2.5 to 3.25. So the damage probably has been done largely in interest rates, and that the economy isn't growing that quickly. So interest rate sensitive securities can do a little better here, and they are. The problem is, in the REITs, I think you have to pick your spots. We would prefer to focus on the industrial REITs that are a little more economically sensitive. They have a little bit better ability to raise rents than, for instance, the retail REITs, which are more consumer-driven, and the Canadian consumer is a little bit weaker.
So who would you go for?
So we would prefer something like Granite REIT, which owns a lot of the Magna properties. They have very low debt, and they have lots of opportunity to grow. We'd prefer something like Pure REIT, Pure Industrial, both of which I think would be more attractive than something like a Crombie. Now, going to the Bank of America. The Bank of America, I think, is a different story. It's more of a growth-oriented story, and you're going to get probably higher dividend growth, but you're coming off a very low base. So if what you're looking for is yield, Bank of America is not going to probably provide it to you, but it's probably got more upside in the company. So we like the financials better than the REITs. We have, close to 30% of our portfolios in financials currently. And we choose to be a little bit more economically sensitive now than we would have been a year ago, because things are becoming a little more sustainable as we move forward from a growth perspective.
Ingo, thank you for the call from Ottawa. We're off to Calgary now. Good afternoon, Grant. Welcome to Market Call tonight.
Oh, yeah. Good afternoon. David, can I have your thoughts on TransCanada? And did I miss some news somewhere why it's up $1.18 today, which is a big jump for that stock? Thanks.
It's a profit report.
Yep. Good numbers. I would say on TransCanada, it's sort of in the same camp as the REITs, a little more interest rate sensitive. We prefer, as opposed to the very big energy infrastructure companies, the midstream energy infrastructure companies. I've talked many times about IPL as probably our favorite in the group. It's our third biggest holding in the firm. A little bit higher growth. In general, energy infrastructure, I think, is a good investment. You're going to get above average dividend growth, in some cases 8 to 10% a year. TransCanada Pipe obviously has some things hanging out there that we're waiting to find out about. So there's a little bit of news risk in that. I prefer probably an Enbridge.
I have been told
TransCanada Pipe.
I have been told that TransCanada's current stock price did not reflect the prospect of Keystone XL being approved or denied.
I think that's probably the case. So there's probably a catalyst out there that could help you. The question is that what you want to make your investment based on? We prefer to invest in midstream energy companies where we can see the capital projects that are laid out in front of them. We've got a pretty good runway, pretty good indication as to what the dividend growth is going to look like. So I would prefer a Keyera or an IPL or an AltaGas.
All right. Thanks, Grant, for the call from Calgary. Back to the local line in Toronto for Diane. Hi, Diane. Welcome to Market Call tonight.
Good evening, gentlemen. My question is on Agrium. I did own it quite a while ago. I sold it at 90. I notice it's still sitting at about this point. I'm just wondering if this is a good entry point for future investments, or you feel that it has the potential to go lower. I'll hang up and listen to your advice. Thank you so much, gentlemen.
Thank you.
Okay. So, Dan, I'll make two comments. One is specific to Agrium, and the second is this type of company. Obviously, Agrium in the agricultural space, dependent on, the health of the agriculture space. Grain prices, corn and wheat, are extremely weak. seasonally, this is probably not the time to be buying fertilizer stocks. Coming out of the growing season, you'd probably prefer to buy them headed through the winter into the spring. This sector is behaving very poorly relative to the rest of the market, and that brings to my second point. If you're in a bull market, you better own the things that people want now, because the bull market will only last so long. So when you're sitting with one of the weakest stocks in the market, in a strong market, what happens if the market starts to back off? It's not likely it's going to start rallying against the market. So, frankly, we're not bottom fishers. We don't buy something hoping that it's going to get better. Agrium's not the only one in the group this week. Virtually every fertilizer company and agriculture-related company is weak. I think that there's just better places for you to be.
Thank you, Diane, for joining us from Toronto. We're off to Winnipeg now for Jay. Hello, Jay.
Thank you for taking my question. I am inquiring about Comina REIT. I would like to know some thoughts about the overview of the REITs in Comina REIT in general. And I would also like to know, it's been losing quite a bit, and should I continue to hold, thinking that it can get better, or should one sell the stock?
Okay.
So
Thank you.
I'm going to give you the same comments. It's a weak REIT relative to the REIT sector. REITs in general are weak relative to the market. The cash flow growth has been particularly weak for Cominar. I would avoid the stock. I know it's an 8% yield, but if you're losing capital along the way, your total return is not very good. So I think I would prefer to focus on something that was like an industrial REIT, like a Granite, that probably gives you more growth and upside in the future.
And as far as hanging on to losers until they hopefully become winners, you've made this point in the past. That is money that is tied up that could be deployed elsewhere.
That's, there's 70,000 publicly traded securities. If you've got one that's behaving worse than almost all of them, you should be exiting. You can only hold on to something that's out of favor for so long.
Thank you, Jay, for joining us from Winnipeg. We're taking a short break. When we come back, we'll look at the past picks.